Phoenix has a headline problem right now. Rents are down 2.7% year over year, which puts the market near the bottom of the national rankings alongside Tampa, Denver, and Austin. If you stop there, it doesn't look great. But if we look deeper, you'll see there's more to the story than what the headlines are saying. In April, Phoenix rents moved up 0.3% from the month before. That was the second straight month of positive movement after declining through the winter. It's a small number, but the direction matters. Phoenix is now sitting in the same category as Miami and Raleigh, which are high supply markets where rents have started to stabilize. The big story in Phoenix has always been the supply of new housing. At its peak in 2023, the market was starting over 25,000 new units a year. That's a lot of apartments hitting the market at once. But starts have since dropped by 39%, down to roughly 15,200 units in 2025. Pre-pandemic, Phoenix averaged just over 10,000 new starts a year. We're not all the way back to normal, and completions as a share of existing stock are still among the highest in the country at 4.7%. But looking at the data, we can see that the pipeline is tightening, and that's what really matters. Jobs are a bright spot in this story. Phoenix grew employment by 1.1% year over year, and for a Sunbelt market carrying this much new supply, that's a solid number. The demand side of the equation is still working. Total investment volume in Phoenix was up 25.5% over the past 4 quarters. Multifamily brought in about $4.9 billion in deal activity, up 17% year over year. The macro picture is a wild card. Inflation came in at 3.8% in April, up sharply since February, driven largely by energy prices tied to the Middle East conflict. Markets have flipped from expecting rate cuts to now pricing in over a 50% chance of an interest rate hike before this year's end. Higher rates make new construction harder to pencil out, which means the supply pipeline could slow further on its own. The Phoenix story right now is a market working through oversupply, but with solid job fundamentals and investor conviction building, we're seeing some great upward momentum. I'm Zach with Rise48, and we'll see you next week.